I'm Penny Sheerin. I'm a partner at Chapman, Tripp, and I've had the pleasure of working in the financial services sector for over 20 years now, assisting a wide range of clients to grapple with the ever-evolving complexities of financial services law. So this morning I have been asked to introduce our leading lawyers session, where our panel is going to discuss finding a path through the maze of the new regulations we are facing at the moment. And I think, as we all know, it really is a maze with twists and turns and sometimes an end which doesn't seem in sight. I've been asked to provide some context to the regulation we have in place now, looking at how it has evolved over my time in practice. We've come a very long way in a relatively short period of time. The pace of change and the breadth of regulation we see now is quite starkly increased in comparison to the position just a decade ago, and it feels like it is only increasing. In many respects, we can be said to be catching up to the rest of the world, but in some areas, such as climate reporting, we are, of course, world leading. We're also seeing a move away from black letter law to principles-based regulation, and more guidance being published by our regulators on their expectations, having a greater influence on the approach taken by industry. Now, I won't attempt to cover all aspects of financial services regulation this morning. Of course, it is too broad. But I'd like to start by looking back in time to the Securities Act 1978, which saw the introduction of the Securities Commission and set out the laws that were then applicable to offers of securities. That Act was supported by the Securities Regulations, which came into force in 1983, which prescribed the content requirements relating to offer documents. The majority of the Securities Act 1978 didn't come into force until the regulations were in place. So there was a considerable transition period of approximately 5 years for industry to come to grips with that new legislation at the time. And it wasn't until 1988 that the Securities Markets Act was introduced to regulate secondary markets and trading, as well as derivatives. And then nearly another decade passes before we see the introduction of the Investment Advisors Disclosure Act in 1996, bringing limited disclosure-based regulation for our financial advice industry. And then we saw further regulation of that sector with the introduction of the Financial Advisors Act in 2008. Around the same time, we saw the introduction of the Financial Service Providers Registration and Dispute Resolution Act, which created the public register for financial service providers and required retail providers to join an approved dispute resolution scheme. And I think it's also around this time, around 2008, that we really start to see the pace and breadth of regulation starting to increase. In 2009, we had the introduction of the Anti-Money Laundering and Countering Financing of Terrorism Act, which has generated significant compliance obligations for a very wide range of financial service providers and non-financial service providers. This Act also effectively created an entire compliance industry, with new businesses being established for outsourcing customer due diligence, obligations and undertaking things like audit reviews. In the insurance sector, we then had the introduction of the Insurance Prudential Supervision Act in 2010, requiring licensing of insurers and a range of new solvency and other regulatory requirements for insurers to meet. And then a key change in 2011, the Securities Commission was replaced by the Financial Markets Authority, which gave us a new regulator with expanded powers and scope, and a regulator which significantly increased in size and therefore its capacity to regulate the sector. By way of contrast to the FMA that we see now, when I was working at the Securities Commission in the early 2000s, there wouldn't have been more than 30 members of staff. By 2010, this had grown to 70 staff, so just prior to the FMA being introduced. And we can compare that now to the 326 staff of the FMA reported in the most recent 2023 annual report. Key to this increase has been the introduction of the Financial Markets Conduct Act, or FMCA as we all know it, in 2013, which expanded securities regulation in New Zealand significantly, and among other things introduced licensing requirements for offering certain products. And since then, the pace of regulatory change has just continued to increase. We've seen the FMCA amended several times, including for financial advice laws being introduced in 2019, again requiring licensing in that sector and increased duties and qualification requirements. We've just seen the introduction of mandatory climate reporting through climate-related risk disclosures being required of large financial institutions. And climate reporting entities have had to significantly upskill their knowledge of environmental science as part of grappling with this new law. And next year, we'll see the start of the Conduct of Financial Institutions, or COFI regime, which will see registered banks, licensed insurers, licensed MBDTs regulated and dual licensed by the FMA. And the changes don't stop there. We know we have reforms coming to IPSA, to the new Contracts of Insurance Bill. We've got the consumer data right and open banking, NBDT changes, CCCFA changes, tax changes, and even further changes that the Minister announced at our dinner last night, including consumer credit licensing and further COFI reforms, acknowledging, though, that these changes were intended to streamline and simplify things going forward, but it's still more change. And it's not just about the sheer volume of regulation and change that we've seen, but there's also been a paradigm shift towards principles-based regulation compared to a form that was previously much more prescriptive. Previously, our laws were setting out quite detailed rules, which minimised ambiguity, but often resulted in quite rigid compliance processes that could stifle innovation and adaptability. And the law wouldn't easily apply to individual circumstances. And in such cases, we were seeing exemptions often sought from the regulator from very technical requirements. Now, while we still have those black letter requirements, we're seeing our legislation drafted with a greater emphasis on broader principles and desired outcomes, with concepts such as fairness being introduced, which is notoriously difficult to define. This shift to principles-based legislation also places a greater onus on institutions to demonstrate how they are achieving these principles in practice. It requires a deeper commitment to understanding the spirit of the law and integrating it into everyday operations, rather than merely ticking boxes for compliance. So what does this all mean for industry? Well, the sheer volume of information and regulation that I think we all know that financial institutions now need to consider and respond to has just grown exponentially. We've got more laws governing a wider breadth of topics and an influx of guidance from the regulators. We've just seen increasing challenges for all in staying informed and compliant. The volume of submission-related work has surged dramatically. I know Carissa would be very happy to tell you all about the enormous workload for FSC in this respect. On COFA's current Q2 2024 regulatory initiatives calendar, there are around 29 formal consultations across the industry. You can compare that even to last year, Q3, there were only 12. The growing complexity of regulatory requirements means organisations need to dedicate substantial resources to grappling with new legislation right through its development process. I think also the landscape of ongoing obligations for monitoring and supervision has also expanded, and there are overlaps between the different regimes. We can see this complexity, for example, in the various open banking related initiatives that are going on now across the government, with MB introducing the Consumer Product and Data Bill, ComCom considering designation of the interbank payment network, ComCom's market study in the banking sector, and also Select Committee inquiry into banking competition. These initiatives also exist alongside the industry initiatives in the API Centre. As we move forward, it's essential, I think, that we all remain adaptive to ensure that our regulatory framework keeps pace with the rapid changes in the financial services sector. As mentioned, this morning's session aims to explore a path through the maze of new regulations and to discuss the opportunities that regulation can bring for business. Now it's my pleasure to hand over to Kate to introduce you to our panel of leading lawyers who will be speaking with you more this morning.
Morning. Can you hear me? Cool. Not much to talk about today, hey? Yes, so I'm Kate Stewart. I'm a director at KPMG in our financial services consulting practice, focusing on regulatory compliance aspects of our clients. With me today, I have Tracey Cross, who's an independent legal and business advisor. I have Gary Hughes, Barrister at Britomart Chambers, Stephen Bendall, who's the General Counsel and Executive General Manager Business Services at ASB, and Geoff Ward-Marshall, who's the General Counsel for Smartshares. So we're just going to ask everyone to take a quick moment to introduce themselves and tell you a little bit about who you're talking to today.
Thanks, Kate. Well, firstly, you need to excuse my voice. You can tell it was a good night last night. So all the hard questions can go to the boys because I won't be able to answer. So I'm Tracey. I left partnership at DLA Piper in 2021 and I now practice on my own account. I'm very passionate about good conduct and governance. So in that respect, I'm an independent director on several boards and I do a lot of governance training for boards and management, really raising their awareness around what good governance actually looks like and how to implement it. And I really do enjoy helping find pragmatic solutions to the challenges that face them.
Thanks, Tracey. Morning, everyone. You're a hardy bunch, a brave and hardy bunch to face regulation this early. I'm a barrister. I've had about 27, 28 years working on regulatory problems. When people ask me what I do, I say regulatory, and they sort of eyes glaze over. So I say, basically, if you're in trouble with the ComCom, the FMA, the anti-money laundering guys, the Privacy Commission, or maybe the SFO, then I might be able to help. People come to me often when you get experience of seeing the bad side, the enforcement side, and then you can help them see what's gone off the rails earlier. Can you intervene and do something? Can you get involved in policy and advocacy reform? And that's particularly the topic we're interested in today, maybe about how to do regulation better. So I work across all those areas, and I was asked for some little fact people don't know. I have a sideline sports law practice in motorsport, would you believe? So there you go. Keeps it different from regulation.
I can't be anywhere near as exciting as that. So I'm Stephen Bendall. I'm ASB's General Counsel and EGM of Business Services. So my job is to support the executive team and the board at ASB to understand their requirements and to protect them and make sure we're doing all the right things. So I have quite a broad remit, so covering legal services and governance, as I say, supporting the board, also corporate affairs, government relations, reg affairs, and sustainability. So very broad. My background is I'm a New Zealand lawyer by qualification, then moved overseas to play a little bit of rugby, ended up staying in London for over 20 years, working first with Clifford Chance, the large law firm, then Deutsche Bank, and then finally MUFG, which is Japan's largest bank, before coming back to New Zealand to take the ASB General Counsel role. So really exciting to see the change that's coming through in New Zealand. It's very interesting to have been in London during the time of the global financial crisis and seeing the collapse of Lehman and everything that followed, and the plethora of regulation that came through in the US and the EU that followed, in response to that, and how that was done and the timing of that and the sequencing, which I think is very relevant to New Zealand now as we play catch up with a lot of this regulation. So looking forward to the conversation today.
I'm Geoff Ward-Marshall, General Counsel and Company Secretary for Smartshares. Firstly, I've noticed quite a few funds lawyers in the room. You do know the supervisors are next door. Anyway, I started out doing funds law work in about 2001 when I joined AXA and started looking after the old group investment funds under the Securities Act, like Penny mentioned. Then went overseas, 10 years in Guernsey, looking after listed private equity funds and lots of interesting stuff. Realised doing that work that I quite like working in the grey, where things are uncertain and you've got to find a pathway through things. Sort of that kind of peripheral bit between regulation and not regulation. And came back to New Zealand when FMCA came into force and worked with Tracey. Let's not forget that 10 years since FMCA came into force on the 1st of December. I won't be having a party, but everyone in private practice at that time should be, because that was a great volume of work that came our way. So that working in that grey periphery area attracted me to a bit of fintech work, and I scratched that itch by joining Xero as their global head of regulatory for 3 years. Really love the funds world. I'm a bit of a funds nerd. You should see my podcast subscriptions. Really interesting. That's me.
Thanks, everyone. A great diverse panel of people here, which is awesome. So when we were thinking about what we'd like to kind of cover in this session, we sort of thought we'd try and avoid digging right into the detail of specific things, and we're going to try and take it up a level and think a bit more strategically about how we can navigate our way through the regulatory change that's going on. So just picking up on the points that Penny made in her opening remarks around the shift to principles-based regulation. Obviously, that can be really challenging for organisations to try and navigate, because it's not really prescriptive. You can't say this is what you need to do, let's do it. But I'm keen to understand what you think the opportunities are actually in that principles-based way of thinking.
Start with me. Well, look, I think that there are opportunities. I mean, look, I think some of this is sort of obvious. The principles-based regulation gives organisations the ability to apply those principles, appropriately within their organisation in respect of what the business wants. So, that is flexibility as compared to rigid rules. So I see a lot of benefits in that. Sure, you can argue, there's not enough clarity and, I need to know what I need to do. Well, that's how we got into the sort of tick-the-box compliance difficulties. So, I think that there's a real opportunity for organisations to actually own the stuff and get ourselves out of the weeds of compliance being something that's done by the legal team or the compliance team, and sort of principles-based, I think, brings a much more holistic view of things. If I look at even just the application of sort of COFI, the implementation, I've seen, whole teams are involved in actually considering for the business what fair conduct outcomes look like for customers. I mean, I think that's a positive. I mean, I can't recall having seen that when we've been dealing over the years with compliance and obligation registers and all of that sort of the stuff, which has just been very sort of systematic, and this is what thou shalt do and how you shall do it. So I think that there's a lot of opportunities there. I think that it provides accommodation and flexibility to deal with sort of further changes rather than rules which are really sort of a future guess as to what we might need to deal with. I think that there's an opportunity to get an approach across industry. When I say that, I mean, if we look at sort of COFI, we all know that we are to focus on fair customer outcomes. That is what we all need to do, and that is absolutely the right thing that we should be doing. I think that, so while everyone will do something differently, appropriately for their organisation, we've got that common focus, which I think that's good. Then we can start sharing, sort of our stories, our learnings, to have a much more of a collaborative sort of industry. I mean, I think that there was a general message yesterday around the need for collaboration. Why can it not be sort of in the regulatory space as well? So I think there's a lot of opportunities with principles based. But I know that there's always a different, side to the argument, and we are lawyers. And we like to, we'll all have different views. So anyway, they're mine.
With that invitation, I will take a slightly different view. I'm not at all against principles-based regulation, but what I see sometimes in practice, and particularly when somebody has done something that the regulator later thinks is wrong, that principles-based really means the law sets a vague, waffly standard and doesn't tell you how to get there. And that's the kind of give them enough rope approach, really, because the regulator will come along in a couple of years and tell you haven't got there, and then maybe the court will elaborate on exactly what that fluffy, waffly standard was meant to look like. Now, of course, that is not, that's a bit superficial, because these things are shaded in by regulations and rules and guidance notes and codes of practice and exemption notes. All the clarifications come through, but it builds a very complex thicket of regulation. And what I see often with clients is the bigger end of town, large banks and funds and insurance companies have the resources, have the team of specialists to grapple with what principles-based regulation means. They can implement it in a proportionate, flexible way. Smaller businesses without that are sometimes floundering, and so they're really dependent on the guidance and the ideas coming from the regulator about what is best practice. Many of them would say, actually, forget the principles, just tell me what I need to do, prescribe it, and then I'll at least know the path to follow. So I think it depends who you talk to. And the principles base works really well when you're trying to develop a new system, get everybody to collaborate, a working understanding of what sort of implementation looks like. It doesn't work so well when a couple of years later you're told, it actually means this and you got it wrong.
I worked on a very large enforcement action in London where the allegation against my organisation was whether we had been open and cooperative with the regulator. So that was the principle. So this is an example of principles-based regulation. Now, what does that mean? And we sort of had the sense that, the regulator had formed a view as to what the answer to that question was and how would we go about defending that. So I think it was an example of where you have principles-based regulation which leads to potentially just what is someone else's view. So that's the risk of it. You don't have that clarity of what you're supposed to do, and so that can be a challenge. Having said that, I think if you can look at the particular regulation, I think Kofi is a very good example of this, where, what is the purpose of it? Well, it's to treat customers fairly. Now, if you're a customer-led organisation, actually, strategic alignment between that regulation and the way you ought to run your business. So, ought to be win-win. And there's, it's a great example. But other situations can be more difficult to navigate through. I do think, having looked at the US regime and having sat in London and worked very closely with a lot of US lawyers, is their sort of rules-based approach, where you've got hundreds and sometimes thousands of rules, is actually really hard to run and actually really expensive, because you need a lot of lawyers to remember all those rules. So the advantage of principles-based, you can have smaller teams, but sometimes you're a little bit in the hands of the regulator, and then it's really down to regulatory relationships. I think the supervisors in the regulators have a large role to play in a principles-based regime to really help organisations comply, as opposed to trying to catch them out to find that they've got it wrong.
Thanks. Yeah, I think principles-based regulation has become a bit of a theme since the global financial crisis. I think there's a perception then that strict tick box compliance failed. You could tick all the boxes, but you would still fall over, and there'd be queues outside your bank. I think the key to successful principle-based regulation is getting consensus. I mean, it's hard to argue against the principles. Someone says everyone should behave well and treat their customers fairly. You can't submit against that. But I think the key to it is getting consensus about what does good like to get to that principle. And it's hard to get that consensus without support from the supervisors, without appropriate guidance from the regulators. So I don't think you can't have a principles-based regulatory regime without that detail underpinning it. Repeating, I think, Gary's comment about stifling innovation, it's harder to implement. There's the principle itself, there's figuring out how you get there, there's the guidance that initially comes out, there's the supplementary guidance you've got to read, there's the post-implementation review. And it's difficult for a small new player to come into that and comply and get a license. I wonder how I haven't seen any new MIS managers recently, but I wonder how a new one would come into the industry and be successful in a principles-based regime with that mess. But I think principles-based regimes in the regulator's eyes are good. They're flexible, they're durable. You don't need to replace them all the time. But it does make our lives harder.
Don't forget to ask questions in the app. That'd be awesome. Thank you. That was awesome. Sometimes I sort of observe with principles-based legislation or the kind of new regs coming through, participants are trying to fit what they already do into those new regulations, rather than kind of thinking about the bigger picture and what they could do to change to meet those new regulations more kind of strategically, I suppose. Tracey, I know you've got some thoughts around how we might show leadership in this space and thinking about that from a compliance governance angle.
Okay, I can see that I'm going to be the odd person out here with regard to my views. I think just picking up on some of the points that are being made, I think that while I do see real opportunities with principles-based legislation, I think that there is a mindset change, and I don't know how long we keep doing what we've been doing. I see that, everything that we've gone through, even with regard to COVID, etc., we need to do things differently. So I think that we should be open to that, keeping in mind the challenges. And I do see that it's a mindset change. I think that, there needs to be more trust with the regulator. Now, so I don't know if we've got any regulators in the room, if you may. If not, I'd ask why not? Why would they not want to be here and listen to this conversation? Because I think that I think there's some important messages for this to work. We need to trust them. We need to be working together. We need a more sort of sophisticated dialogue going into a principles-based regime where, I sort of think that what I like is that it gives organisations flexibility to apply the principles, in their own way. That empowers them, but with that goes responsibility. You need to own that. You need to own your story, what you're doing, and why you're doing it. The regulator needs to be open to not just sitting there in judgment on, well, that's not what or what I think. So there's a lot of work to be done there, but we need that sort of open dialogue. So I'm certainly not saying it's easy, and I hear your sort of points, but I think in relation to the leadership point, I do like to think that we could be able to lead things in a different direction. We've got the principles-based sort of regime. It's here. What can we do with that? How can we actually lead the regulator and actually sort of make this work for everyone? And you see that within the organisations. I mean, again, coming back to Kofi, the boards need to lead that. So I sit on a board, and we're very much involved in the fair customer outcomes. Now, that wouldn't have happened when we were dealing with just normal compliance, which is done by the fabulous teams that we've sort of got. But it's not, sure, we're getting the compliance assurance sort of coming up to the board, but there's not that engagement. We're not thinking about, fair customer outcomes and, well, what does that mean for our business and for our customers, etc. So you're getting, more leadership from the top. And I think that's what we need. We can't have boards sitting in ivory towers and not actually, being involved in the business. So I think it is a good opportunity from that perspective. I think that there's always going to be resistance to change. We don't like change. I know change is a lot. Is very expensive. There's a lot of change needed in the industry, in respect of consolidating, all the licences, all of those things that we're talking about now. So I'm not saying that we don't need any change, but we do need to embrace it. I mean, when we were sort of preparing for this, we were sort of I was referencing the FCA in the UK when they brought in their consumer duty, and the executive director was encouraging the industry to just eat the frog. Which is just, you might not want to implement this consumer duty, but let's just do it. Let's just do it and move through from there. And, they talk about, sort of year on down the track that now, they've had a feast of frogs. And that progress has been made. Now, I'm not saying that it certainly won't be perfect. I don't think we get perfection in sort of regulatory environments, etc. But it is on that journey. But it is a journey that everyone needs to take. The other thing that I'd say about sort of leadership in this sort of space is that I think that the governance is really important. I think we often talk about regulatory compliance, and it has been at times more often than not a very tick-the-box exercise. I think we need to sort of elevate our thinking to compliance governance and what that looks like, because now we're not just dealing with what we're told to do through law or sector requirements. Then we have the overlays of what we say we have to do through our policies and processes. We've got more stakeholder engagement. We've got expectations from regulators, from customers, etc. We've got all of these different layers. It's a much more, I think, holistic approach to regulatory compliance that we need to sort of elevate ourselves to think and lead. So I think things are changing, whether we like it or not, and we've got a choice as to how we adapt to that and how we lead.
On this angle, actually, I'm right behind you. I'm not going to take a different view, but maybe a different twist on it. I think we do have that kind of governance or, how to implement problem, and you get that both on the private sector. How do firms grapple with these, fragmented, disjointed waves of regulation? It used to be, I quite like the metaphor of waves of regulation, but that suggests nice rolling breakers that you can surf one and then look at the next one and get ready. And it's not like that. It's very choppy, messed up waters all the time. So firms are having to battle with that. And then the way in which they set that direction, that culture, from the board, get that implemented all the way through the different product lines, the staff training, all the systems changes that are needed. That's not easy. And, we sometimes hear cliches like, the tone from the top has to be right. But actually it's what goes on through the implementation phase, and what does that look like when it hits the ground and a customer has to deal with something or make a claim on a policy or whatever, or go to the ombudsman. And then the twist on that for me is I see just as many kind of governance problems actually in government, in the government agencies side. And I think it's important that in the private sector we politely, respectfully call that out and say, well, hang on, you can't expect the private sector to run around and somehow react and deal with all these crazy waves or bits of regulation at disjointed times if government's not going to get its own house in order. And what I mean by that, just a couple of examples are, when we try to work on law reform projects, and one I've been involved in for 2 years at least now, is the anti-money laundering, long drawn-out statutory review project. So I've worked very closely, with Ministry of Justice particularly, but other agencies on this. There's a few things that have emerged that we all know. You could get 20, 30 people in the room in this field. We can immediately identify it needs to change. One very specific example is around address verification. So it's a pain point in the system when you go to open any kind of facility that you need to prove, and the entity needs to verify name, date of birth, and address. And address is almost meaningless in this day and age. You're better to get a mobile phone number and verify that. So we all agree it needs to change, but why has it taken 2 years, And that is basically a paralysis within government. There's too many silos, too many people wanting a view on it. We then had change of government, and the period, I think, history will look back and say the 9 months of the great repealing of everything that was on the statute books. So that was all well and good. Maybe some of that was necessary, but that meant 9, 10 months of actual paralysis in the ministries and the agencies and officials looking at this, where they couldn't get on and move forward. We've now got 2 potential bills coming to amend the AML law. I don't know why there's not just one, frankly, but they're not prioritising or able to get it through the parliamentary legislative logjam of stuff quick enough. And so that suggests actually that the good messaging and tone from the top that we hear isn't filtering down in the government side to actual implementation either. And I think we need to keep government agencies honest.
So I want to take a positive look at regulation and take the example of climate disclosures. So, I think climate disclosures is an example of where regulation is providing challenge to the leadership of companies, and really it's around a company that's in scope setting out the risks and opportunities of climate change. Now, would we all have done that work if it wasn't for regulation? So I think some companies would have been forward-looking and done that work. Others would not have done it because it would not have been mandated. So I think regulation can have a role to make companies think about the things that they should be thinking about themselves and take that forward. And I do think that climate disclosures is an example of one where it makes us think about things that are happening to our businesses, and also think forward in terms of what that's going to be for our business in the coming years and decades. And then I think, particularly in the climate space, you're really talking about, of course, physical risks, but also transition risks. So how will industry change and consumer preferences change as the climate adapts and as certain technologies take over from old technologies? So if you're a business that, like mine, lends forward, 10, 20 years, you really need to be thinking through that horizon. And climate disclosures, I think, is an example of a regulation which is making us all think.
Great, thanks. I think I might take a slightly different stance on climate statements and managed funds. I can definitely see the regime making sense for a corporate entity that has control over its own emissions and what it buys and sells. It doesn't quite make sense for example, a passive index tracking fund that invests in the US 500. It's very difficult to get the information on the climate emissions in those 500 companies. Those 500 companies can change. People come in and out of the index. Plus, what you sold the investor on the tin was that you would track the US 500. So that's what you sold them, and that's what they are buying. And yet you need to go through the process of finding climate risks. Also on the prioritisation piece, and again, not wanting to completely show my card about climate statements, but I find it it confusing to see it taking so long for AML reform to come in when there are clear positive benefits for business and consumers in that, compared to the climate regime, which came in, to my mind, relatively quickly. And having been on various consultations and XRB forums for the climate statements regime, you could tell that managed funds in particular were being squeezed into a square, peg into a round hole in the corporate box. The initial drafts that came out for the climate standards for managed funds were confusing, incorrect, and there was a lot of hand-holding needed to get it to a place where we could produce a climate statement. If you look at the climate statements that have come out now for managed funds, I think there's a common theme through them all, which is we all have very similar governance regimes, but none of us know what we're disclosing. It's very heavily tempered and heavy disclaimers about what's in there. I feel like I'm getting a bit ranty.
I can bring you back. I can bring you back.
Bring me back. But I guess, to my mind, like I said at the beginning, I really love working in the grey. So I love the opportunities that principles-based regulation gives you in an organisation to figure out what is that bright line path to get from what the principle says to your, putting in place your management and controls and getting a whole organisation buy-in to how you deliver that for your customers. I love that work. I love designing that stuff and working with the whole business to do it. So I think there are lots of opportunities there in that for compliance teams and lawyers in-house. Great. Kate brought it back. There you go.
Thank you. Hey, Stephen, I'll stay with you. We kind of have a question that we were going to talk about around the sequencing of reg change, the opportunity cost of that change, and there's a lot going on. Is it stifling innovation? All of those kind of things. But we've had a question from the floor that I think is related. Does all of this regulation really benefit New Zealand, or is it overall just make work scheme for officials, lawyers and compliance experts? So, what's your view on the opportunity cost of this?
Yeah, so look, I think the starting point is, first of all, there has been a lot of change and it's happened quite quickly. And back to my earlier comment around, having been in London and seen the response to the GFC, actually, a number of those laws took years to be implemented. So they were drafted quite quickly, but there was a lot of consultation in the US and in Europe, the UK and Europe, around how to implement. And some of those laws probably was like 5, 6, 7, 8 years later that they actually came into being. So time was taken to get it right, not in all cases, but in many cases. What I do think is happening in New Zealand is a lot of these rules are being rammed through quite quickly, and we don't always have the time to think it through. There's absolutely an opportunity cost with regulation. So, and I think if we think about just the volume of change at the moment, inevitably it is crowding out innovation and work on customer experience that would otherwise happen but can't happen because large parts of organisations are directing their resources towards compliance. So that's just a fact. You've got a limited pool of resources. If a lot of it's going to compliance, it's not going to other things. So I think that's important to note. I think a second consequence of a lot of change is it can be a barrier to entry for new entrants to come into a market or stay in a market because it takes a lot of resource to comply with all these rules. Now, of course, the Commerce Commission has just completed their market study into banking, retail banking, published their final report. And, of course, one of the key call-outs is regulation and whether it is a barrier to new entrants coming in. So I think the reality is the higher the regulatory burden, the higher the barrier to entry. I think the third point around the opportunity cost of regulation is it can create risk. So, at the moment, there's a lot of advocacy for open banking to come in New Zealand. So, look, I think open banking in principle can be a very good thing, but we need to understand it involves the sharing of data in an ecosystem. Now, currently, your data with a bank is protected, your data and your money is protected by your bank. Once you're in an open banking situation, you're sharing that data into an environment, which is fine, provided that environment is safe. Now, of course, we've just had a lot of, big focus on frauds and scams. It continues in New Zealand. It's a plague and something that we all need to be working on to address. But that sort of risk needs to be thought through. So while the headline of open banking creating competition is a good thing, at the same time, the regulation's got to be implemented in a way which addresses the risk and takes care of the unforeseen consequences. And in that sense, I think it's about, so bring it in, but do it in the right way, take the time, and absolutely the government and regulators should be consulting with the industry participants to make sure it's done in the right way. I think there's a couple of key opportunities we have in this space. One is, I think, the Ministry for Regulation under David Seymour, in my view, is a good idea. It does look at the reality that regulation creates a burden. Now, it has, of course, a benefit, but we've got to get the cost-benefit right. Are we doing that in all cases? Not necessarily. Sometimes it's like, well, let's pass a rule and we've solved the problem. Actually, you haven't solved the problem. You might have solved part of the problem, but you might have created a different problem. I think the second thing is, and this is particularly in the financial services sector, the Council for Financial Regulators, which is the main regulators plus the main government agencies, I think have a real role to play in taking what's coming down from government, sequencing it, organising the timing, consulting on the things that really matter up front, and then implementing, as opposed to simply passing it through because it came from government. So I think there are opportunities. I think the final point I'd make in this space is, and we've made this a number of times now already on this panel, the relationship between the regulated and the regulator is really critical. And I do think in this world of a lot of regulation, we really need our regulators to help the regulated entities comply and not spend their time trying to catch people out. Of course, if there are miscreants, enforce, but the primary setting should be supervision and helping companies to comply.
Thank you. We've had a question that kind of relates to that around are regulator guidance notes soft law that must be complied with if a principles-based regime comes down to regulator interpretation? Who wants to take that one?
You may not like it, but I've got a view on it. Because of the principles-based regulation, as we said earlier, there is a need to shade in the detail, and they do that in various ways. The guidance is super important for industry who are trying to grapple with what these vague concepts mean. So people clutch onto it and start to build it into their programs and their systems and their compliance documents, and it takes on a bit of a life of its own. And the anti-money laundering is a classic example of that, where to really know what is expected of you, you need to dive into the DIA or the FMA or the Reserve Bank guidance on a particular topic. It got so bad that the DIA had so many questions and so many issues, it had about 120 FAQs on its website, which in a way gave you more insight into what the hell they wanted than anything you would read in the official guidance. But that's not great law making, right? And it is soft law in the sense that entities, businesses feel they need to go along and comply with it because nobody wants to set yourself against the guidance that's coming and do it differently. But actually, until that is challenged or tested or ultimately decided upon by a High Court judge, that's not the law. That's the regulator's view of it, and you obviously want to have regard to it, treat it carefully and work with it if you can, but I often see people, and regulators as well, seek to enforce it as if it's hard law, and that creates a bit of a problem, particularly when some of the staff, if you have an on-site inspection or a visit from one of these regulators, you're often dealing with quite junior staff who have not worked in industry a lot, are following a tick-the-box regulator template as often as anything, and are then telling you, well, this is best practice because it's in our guidance or our FAQ, and that creates some problems.
Just a question for you on that. I mean, do you think that, and I think you're right, I mean, we've always said, for many, many years, you're a fool if you sort of ignore that guidance because, it is soft law. But, sort of talking about principles-based regulation and a change of mindset and the relationship that we really need industry regulators, supervisors, etc. Do you think that there's a space, though, to actually be clearer with the regulator in issuing the guidance, and the intention of the guidance? It's actually, making sure that we've got our foundations, our understandings of how this is all going to work clear. Again, I come back to no FMA person in the room. We need to be having a conversation. If we want it to work for everyone, we need to have that trust. We need to know what the expectations are around the guidance because, I certainly agree, you can't ignore it, that's for sure.
I think one important point on guidance is, I think with a lot of principles-based regulation, where something sits squarely in the middle, it's fairly straightforward, and there's no real issues. It's the edge cases that are the problem. And of course, with edge cases, we have to exercise judgment, and judgment then starts to come with risk, because we can't be really sure in a principles-based world that actually we're on the right side of the line. I think as organisations, we have to have confidence in our own judgments and act in good faith. And if we do that, be prepared to sit in front of the regulator and explain how we reached a particular view and why we're comfortable with that. And I think that's a setting that we're going to need to adopt. If we're always looking for certainty in a principles-based world, we're not going to find it.
Sorry, just jump in there. I think it might have been the UK FCA, but I think they've described their guidance as they will treat it as a shield for, the regulated entity can use it as a shield, not necessarily safe harbour, but if you follow the guidance, you're probably on the right track. But the FCA said they won't use it as a sword to beat you up with. It's guidance. It's all part of building that consensus about what the principle means and how you get there. Certainly, principles-based regulation comes with interpretation risk, but that's part of the flip side of one of the benefits of it, which is you get to choose your path.
Thank you. We'll change tack slightly now and think about all that's going on in the kind of tech, fintech, AI, digital space, and how we can use AI, digital tech to think differently about compliance. So Gary, I'm interested to understand what you're thinking, seeing, hearing in this kind of fintech space and what the opportunities are.
I certainly won't claim to be an AI futurist. That's probably overselling it. But I'll try and be more positive. I've given the regulators a serve and the government a serve, so let's look at opportunities. I do a fair bit, I suppose, with fintech kind of clients, and that's spun out of different areas, actually. Sometimes it's coming from a point of view where there is, as you said, barriers to entry created by regulation. And so they're small, want to move fast, have a good idea or a wonderful app, but need some guidance as to how on earth they can get through this when they haven't had 10 years of experience or consultation with this regulatory mess. And then there's other things that come along where I think there's opportunity for regulators and government to let the technology lead innovation, actually, and for the regulation to, rather than seek to control that, put it into a box, apply the rules at the outset, to let it develop and listen to the industry as to what they're suggesting. And maybe that sounds a bit like a sandbox or a sandpit idea. Sometimes that's appropriate as a way to test these things out. But some of the things I've been involved in recently, and you sort of love where it's going, but it equally drives me to despair on the regulatory side, is around the open banking and digital identification, and some of the privacy commissioners' work on biometrics and facial recognition. So there's a lot of really good, cool stuff happening, and people with clever ideas, and they can solve a number of the regulatory pain points we're talking about. Again, if I just take AML as an example, a regular problem is the duplication of resource around identity verification, right? There must be a better way to do that so that we don't have a bank, a lawyer, a real estate agent all asking the same questions and trying to verify the same information. Some of that could come through in the digital identity trust framework, but that's, again, a long, slow-running train to get there. And fintech players have good things to offer, and we can learn from overseas. The UK particularly, I think, is doing some of this stuff a lot quicker and better than we are currently. But it just gets wrapped up in so many government processes. We need a framework law, we need task forces, we need working groups. There's often a problem of too many chefs in the kitchen, actually. If we I don't want to keep harping on about AML, but that's currently got 6, maybe 7 interested ministers. So different ministers want to have a finger on the pulse of what's going on. And I think we need, sometimes with something like open banking, which traverses Commerce Commission, Privacy Commission, and obviously Reserve Bank and the integration, interoperability that's necessary with the banking system, somebody needs to be set out as the lead agency and say, look, we've got to have somebody steer this through. Yes, there's a number of government agencies that need to be consulted and dealt with, as well as on the private sector, but for heaven's sake, we just need a more streamlined approach. And, we had a really good session yesterday on open banking. I don't know, some of you might have been in that, but it was just kind of highlighting, we've been at this process for 2 or 3 years talking about it. We've now got 2 potential laws, the one that's before Parliament, the Consumer Product Data Bill, and the Digital Identity Trust Framework, which is already a law, but none of the details yet come through. So we've got 2 things kind of addressing similar topics, and if you're somebody grappling with the regulation and how you respond to that, you go, well, which horse do I back? Do I submit on all of them? Do I submit on both? Who's sort of running this? It's coming through at different times. And that's led to this very slow process where people are saying we'd like to see open banking implemented by mid-2026. We've been at it for 2 years already. And people are saying, well, is that too soon? Can we get there? So I totally take your point on board. The security and safety and cyber risk and all those things need to be at a very high level. But why is this a 5-year process? That creates its own barrier to entry and to innovation in my mind.
Actually, that point around digital identity is a very relevant one in the context of open banking. So our view at ASB is that digital identity would be a real enabler of open banking, and we've been advocating for that. But exactly to your point, Gary, around there isn't always the coordination in government around the sequencing of these things, and so what we are seeing is the push forward on the open banking side, but not really on the digital identity side, even though it would be a big enabler and a big simplifier in that regime, as well as in the AML space.
Not much to add from me as a funds lawyer on open banking. I'm sure we're probably 3rd or 4th cab off the rank of being brought into that. But in a previous life, I was very interested in it. And I don't know where I'm going with the story, but I remember going to a digital identity focus group in 2019 at the DIA's offices, where a bunch of us spent a lot of time putting post-it notes on the wall, writing down what digital identity meant to me. It does take a long time to get from putting post-it notes on a wall to getting a framework in place that assists with AML compliance. I think in my world, RegTech in particular will help a lot with compliance. The more we can automate, the easier it is to happen. Smartshares has 10 schemes, 240 funds. That's a lot of quarterly fund updates to produce. It's automated some of it, but I'd love it if much more of them. I would like it if fewer of them came across my desk.
Just one other build in the space of opportunities for improvement, and particularly with technology. So, I think there is an important proposition around a level playing field to regulate the activity rather than the entity. Now, a lot of financial services regulations around the entity. Once you're a bank or a non-bank deposit taker or whatever you are, that's your set of rules. But actually the activity now, as technology evolves, is often being performed outside of those organisations. So Kofi's a great example where there are certainly entities that would be relevant from a conduct perspective who are outside the regulatory perimeter. So, we would advocate to regulate the activity, not the entity. Because if you're a consumer, why should you benefit from protection if you deal with one provider, but not if you deal with another provider? I think this is particularly relevant in the payments space. So a lot of payments activity now is done by big tech, and Apple's a great example. They're not a bank, so they're not subject to bank regulation. But so from a payments perspective, different set of rules. But why should that be if you're a consumer and you're consuming that service?
Just one final comment in respect of the innovation. I would like to suggest to the FMA that they could get a bit more better resourced in this sort of space, because, there is no one to sort of talk to. I've had clients in Disruptive that want to do some really good stuff. They want to have a conversation. Try as I may, you can't get anyone there to talk to them. And so they don't. And I think that's sort of a lost opportunity. So while we have to have, be fit and proper in business, etc., and have all the appropriate resourcing, it would be great to see the FMA appropriately resourced in that space so these opportunities can be pursued. So, but there can be sandpits to be played in, etc., and there can be some really good conversations going.
Thanks, Tracey. I think that's there's a question here from the floor that sort of touches on a bit of that, and it goes back to the point where we're talking about the sort of junior resources that the FMA might send out to visits and things. So, potentially inexperienced supervisors or regulators are part of the problem. Is the real issue, how do we improve the capability in the regulator? What could they do to attract more of the brightest future talent? And is the industry doing enough to work with them to uplift the regulator's knowledge and understanding?
I'll start. I think the industry is doing a lot. FSC, all the submissions, all the work that goes on, the conversations, the invites to come and sort of talk about issues to industry. Sure, there could probably do more, but they're well funded. They're big boys and girls. They need to sort of do their job as well. But I do think that sort of more sophisticated dialogue, we need to set our expectations maybe a bit clearer of them, as they are doing to us, to actually make it work for the better of everyone in the industry.
Just going to say, I think there's absolutely a role of the regulated entities to help, not educate, because that maybe sounds a bit patronising, but certainly work with the regulators in terms of understanding as a lot of these things develop. And I would take the example of the Commerce Commission market study. So at ASB, we spent a huge amount of time leading into that process and working with the Commerce Commission. And we really saw it as our role to have a view, but make sure that's a constructive view for the, not just for the benefit of ourselves and the industry, but for New Zealand as a whole. And we think we had a lot to say in terms of being on the ground and running that business and seeing how it works. And I think that was a very constructive process, and we had a lot of engagement directly with the Commission, which we hope was of value to both parties. But certainly there's a role to play for industry. One thing I would say is, and it comes back to this point around sort of 29 consultations, that sort of earlier statistic, just got to really make sure that when we're writing those, that they get read, and we're not always sure that that's the case. And so I guess it's incumbent on us to make sure we don't write 50 pages when 5 sharp pages would do and make the point. But equally, if we're going to put this time in, and there's going to be all these consultations, really got to hope that there's attention being paid. And there are some very good examples, and I'm not going to name them now. One in particular I can think of in the recent past, where a lot of very clear guidance was given by the financial services industry, and it wasn't followed, and the result was a car smash. So, I think we have a role to play, but it works both ways.
Yeah. As a fund manager, we've got a two-layered regulator regime. We've got the FMA at the top, and then they've kind of outsourced their frontline regulation to our supervisors, of which we're lucky enough to have 2. We've got good relationships with all of them, and in terms of knowledge, I do have a concern that the more we go to principles-based regulation, the less technical people you have at the FMA who are writing the detailed rules, who know how fund managers operate, who knows how money comes into a fund, gets ingested in, units get issued. I do worry about that knowledge loss, but certainly they are trying. There has been a changing of the guard at the FMA, and they are reaching out and having stakeholder relationship meetings with us on a regular basis. I had an email from my contact at the FMA the other week telling me that a link was broken on my website, so that was helpful intervention from a regulator. It's the supervisor levels, and I can talk freely because I know they're in the other room, where I think the FMA statement of intent came out that they wanted to streamline their regulatory approach and make it easier for businesses to operate. I do find that sometimes our supervisors are slightly more operational rather than supervisory, but that's educating them about how our business works as well. So it's that reaching that consensus and having that open dialogue, I think, is the key to making anything a success.
So I've been wondering whether to kind of out myself. So I'm no longer at the FMA. To be clear, I am the former General Counsel of the FMA, and so a lot of this debate has been interesting for me, and I've been thinking it's a bit too early for me to get up and offer a thought, but just a couple of things. I absolutely agree that a principle-based regulation is a really high trust model. Has to be. You've got to have people at the FMA that are capable of understanding the policy intent behind the regulation and the implementation of that regulation. So you absolutely have a high trust model, and you need people that are capable of
you need people that are capable of performing that role. One thing that I think you should reflect on as lawyers is, are you trying to help your organisations comply with the regulation, or are you helping them avoid breaching the regulation? Because even that simple mind shift in terms of understanding what the regulatory intent is and ensuring that your organisation is adhering to that regulatory intent versus saying, what do I need to do in order to avoid breaching the regulation, kind of shifts your mindset, because a lot of principle-based regulation is around understanding that policy intent. And as the panel have commented, if generally speaking you are seeking to adhere to what the policy is seeking to achieve, it's very unlikely that you're going to be pulled up on some sort of technical failure to implement a particular or specific requirement. So if you can demonstrate that you are seeking to adhere to that regulatory intent and that regulatory policy, that will take you a long, long way. The other point that the panel made, and I would certainly endorse, is that when push comes to shove, a lot of this does come down to regulatory relationships, and whether that's through your external lawyers or through your own relationship with the regulator. From my experience, it's very, very unlikely that enforcement action is going to be taken for one technical breach, unless it's hugely egregious and it's causing significant harm. However, if there's an instance of repeated failure to adhere to regulatory intent, repeated failure to adopt required standards, and there's a track record there and a history of that, then you're in that territory, that red map of potentially being subject to regulatory enforcement. And I hope that your experience has been that in most cases, when it comes down to it, it's not the first time that the regulators had that conversation with a particular entity. It will be often as a consequence of quite a long engagement process, and again, speaking from my experience, it's not often that comes as a complete surprise to the organisation. They may be surprised at the at the fact that they've reached a trigger point where someone steps in, but it's normally, as I say, the consequence of a pretty significant breach or a pretty significant period of time of non-compliance. So I think there was a voice missing in the room today from the regulator. I think that's a shame. I see a couple of ex-FMAs in the room. I think it would be really important to include them in this type of dialogue going forward. So if they weren't invited, I hope they would be to this sort of a panel next time round, at least give them the opportunity to be in the room. As I say, I can't speak for the FMA now and wouldn't dare to, but I think it's been a really interesting panel discussion, and thank you for that. And I hope that a small contribution from a different perspective helps.
Over time, so I might need you to wrap up, please.
30 seconds.
Yeah, I mean, I agree with all of that. Yeah, and look, the starting point of regulation is to help consumers and set the guardrails, and that's great. So, and then, I do think organisations need to lean into that in a positive way and look at the strategic alignment between the regulation and particularly protecting customers. And I think Kofi's a great example of that. That's exactly what it's about. If we do it right as an industry, that's going to be great. Yeah.
And I think too, previously we have had the FMA here. This is a very inclusive, conversation. So.
Okay, we were going to do takeaways, but we've got no time. So thank you to the panel. It's been a great discussion, and thanks, Nick.